Hi there, good morning. My name is Victor Alui, and this is your weekly financial markets roundup. We start off in the US where stocks rallied on Friday to kick off November as the Dow added 0.69%, the S&P was up 0.41%, while the Nasdaq gained 0.8%. This performance on Friday essentially ignored the lackluster jobs reports, that we had seen, which essentially showed that the US economy added just 12,000 jobs in the month of October, which was far below the estimate of around 100,000 jobs. And this marks the weakest level of job creation since, the depths of COVID. This is the weakest that we've seen since December of 2020. However, the unemployment rate held at 4.1%, which was really in line with expectations. Also, on macro data front, we saw Q3 GDP coming in last week at 2.8%, which was less than the 3.1% that was expected and the 3% that we had seen in the previous quarter. However, traders were really not reacting much to the job numbers in particular, believing that the dismal data was really impacted by hurricanes and also the Boeing strike. So the belief really is that we're going to see revisions somewhere along the line that would give a true reflection of the sort of jobs that we saw created in the month of October. However, we think that this report signifies a slowdown in the jobs market, and this is likely to create even more impetus for the Federal Reserve to cut further as its meeting progresses. The week was largely choppy, with the S&P losing 1.4%, the Nasdaq slid 1.5%, while the Dow was down 0.2%. The strong start to November, particularly what we saw on Friday, is really coming after a challenging month of October as election uncertainty really weighed on investors. So if you look at the month of October, the Dow lost 1.3%, the S&P was down 1%, while the Nasdaq fell 0.5%. This week is certainly going to be a momentous week, not just for the US markets really, but for global markets and for the global economy. We've got the US election coming up on Tuesday. Also, we've got the Federal Reserve meeting, outcome of which we will be seeing on Wednesday. So these two events really would shape near to medium term market sentiment and market direction. So we'll certainly be keeping a very, very close watch on these developments and what their impact would likely be, on the markets, going forward. Over in Europe, the Eurozone economy hits a 2-year high in terms of growth, 0.4% for the third quarter of 2024. This is higher than the 0.2% that had been expected. We saw the strongest growth from Spain and Ireland. Spain grew 0.8%, Ireland grew 2%. Germany, however, avoided a recession with a 0.2% growth. We had seen the ECB cut rates at its October meeting for the third time this year, after headline inflation came in at 1.7% in September. The ECB president, in fact, the ECB essentially cited, persistent weakness in economic activity in the euro area, and that was a key reason it decided to, implement another rate cut at its meeting in October. We see that market really is sort of pricing in a 25 basis points cut at its last meeting, this year. The ECB key rate, which is the deposit facility, is currently at 3.25%. Eurozone inflation data is due out on Thursday. Over in the UK, the Labour government put out a plan really, which essentially is looking to raise taxes by about £40 billion in a new budget plan that is really aimed at plugging the hole in public finances and also allowing, for investment in public services. The plan, however, is also going to see a significant rise in borrowing in the coming years. As a matter of fact, the Office for Budget Responsibility forecasts that yearly borrowing will be higher by about £36 billion every year over the next 5 fiscal years. Also, it updated its forecast for GDP growth. It expects now that GDP growth for this year would be 1.1%, 2% in 2025, and 1% in 2026. Now, this compares to the previous forecast where it expected growth for this year to be 0.8%, 1.9% in 2025, and 2% in 2026. Now, the budget, puts tax really on a path to a 38.2% of GDP, which really will be its highest level ever in the UK. And it sees higher public service budgets funded through a 28 billion borrowing through 2025 and 2026. This is essentially going to be 28 billion pounds more than had been previously planned. So all of this is essentially alluding to the fact that the government is looking to basically raise taxes and also increase borrowing. So on the back of all of this, we've seen UK gilts, which are essentially UK bonds, soar. 2-year gilts rose about 13 basis points, while 10-year gilts rose by about 10 basis points. Over in China, manufacturing output was positive in October, according to the Caixin S&P Global Manufacturing Index, which came in at 50.3, above estimates of 49.7. This essentially comes after, official PMI data that was released on Thursday also indicated, an expansion. So this basically is showing that manufacturing activity is certainly starting to pick up in China. Over in our local economy, system liquidity last week ended positive, about 398 billion. So we saw OB and overnight rates settling around the 25%, mark. We had some regulatory debits, CRR debits, and all of that last week. Nevertheless, we still saw system liquidity, close positive. The local treasury bill market was really calm, nevertheless tilted towards more of a bearish, sentiments, with limited bids to match. There is going to be an auction this week, so obviously the market will basically be looking to that for clues and signals really on monetary policy direction really going forward. Also, the bond market, was relatively calm as well, slightly bearish sentiments. We saw, yields on average drop by about 3 basis points. Nevertheless, I think that the outcome of the Treasury auction this week will prove very, very crucial really in determining, near-term market direction. That's pretty much it in terms of our market roundoff. I think the critical things this week really will be looking at the outcome of the US election. We've had quite some volatility leading up to the election. We think that whoever wins, we would see, market sentiment, straighten out, and we should see the market really move up strongly from here on out. Also, the outcome of the Federal Reserve meeting, which we should see on Wednesday, would also be very, very important and crucial in determining not just, moves in the US, but, on the global scale as well. Thank you very much for your time. We hope that you have a very, very productive week. Thank you.